Good morning, everybody. Today is Thursday, 7:25 a.m., March 3, 2024. Just, review the market wrap, the market structure, and compare what we have in the book right now. Okay? Yesterday at the close, you guys notice that the volatility skew again, print. No, sorry, not again, because yesterday was a bearish. Today, print like a bullish smirk, right? Where below 5,220 puts start to be paid, and above 5,225 calls supposed to be paid, right? What levels told us? What delta told us? What I wrote over here, so maybe we expect a rejection at 5,235, but if you break 5,250, tend to be tested, right? Per delta, and also per gamma, right? And also per gamma, not per gammas, per options book. You guys also realize that at the close, some orders we need to consider bearish orders because was put spread printed, right? So such players are looking out. For example, this one spread was 5,215, 5,225, and 5,225 and 5,235. Okay, 35 is a level per deltas that's supposed to be you will see a rejection, right? Suppose that you will see a rejection. So, as I told you guys, the important, in my document are the levels. Because, I provide my interpretation. Remember, I'm not a computer and I only see what is passing by the screen. Dealers' computer, calculate premium in billions and billions of orders. They know how to collect money. So all my analysis is based, fundamentals. And what are the fundamentals? Implied volatility, volatility skew, gamma, mainly delta. Is based in the flow. It's based in the flow. So if you ask me today, Fabio, so the volatility skew today could be a trap? Of course that could be a trap. They could, build a bullish smirk, but to sell premium and to buy cheaper puts and build a hedge. But in the screen is a bullish smirk. So I cannot tell you guys, oh, that's a trap, that's a bearish setup, because it's not. But could you be a trap? Yes, could you be a trap? Yesterday, I was really clear. My interpretation could be wrong because, we have a divergence between book, flow, and the volatility skew, right? And yesterday was a funk. But what I suggest to you guys, play a straddle. When you don't have clear visibility and when you start to have divergence, the safe traders play a straddle. Everybody that play a straddle make money. What I did for yesterday, on Tuesday I bought exactly at the bottom 5,130 calls. And when we backtest 5,175, what I did? I bought 5,150 puts. Yesterday, when we backtest 5,171 and I didn't see a rejection, I saw, markets absorbing all the bottoms at 5,171. What I did, I closed the put and keep the call. Why? Because dealers sent a message to me, said, fuck, the market is going up. Because what, volatility skew told us yesterday, Tuesday for yesterday, below 5,170, volatility tends to be spiked and consequently puts will be paid and call premiums will be burned. If they hold at 5,170, it's because they don't have any intention to pay premium to puts. So now in the pre-market I will close my call, especially because the market wrap, the market structure, the orders that I told you guys over here, I put, instead of to provide my personal opinion, let's work with level. So the region that you have divergence is 5,135. So I consider as a maximum upside target. Since is where delta and gamma diverge, right? So because that I was looking for 5,135 as a maximum upside target. 5,200 is the plus GX, so plus GX we could consider as a support, but we review in pre-market what we have in pre-market, okay? We could consider as a support, and the maximum downside target 5,185, okay? But remember, if you break up 5,135, you know the main gamma, not the main intraday gamma, is 5,250. So we could backtest 5,250 if you break 5,235. So now let's check the future. Look at the future goes to 5,252 and rejected. See how the levels work. The levels also work in the future. Because if they want to dump the market, first of all, they bring the future before the data will be released to the level that we supposed to be see the maximum rejection. That's supposed to be 5,250 because is where we have the plus GX. Okay? See how important are the levels. So now let's compare what we have right now. Since we don't have too much flow, the volatility is still the same. Below 5,220, puts will be paid, and above 5,225, calls will be paid. So between 5,220 and 5,225, look at the implied volatility jump in the region, right? We could see market, you know, before decide the movement, trade in that region and collect premiums from puts and calls. In that case, more in calls, because the implied volatility in calls contracts is really high. It's above 30%. And in put contracts really low, right? Below 20%. Okay? So if you see, especially market trading at 5,220, calls contracts premium will be burned. Because look how high is the implied volatility, right? So, but let's see the flow in the pre-market, and also the flow in the pre-market is updated because, you know, CBOE only update, you know, all the option contracts. If I'm not wrong, like 10 p.m. or 11 p.m. or something like that. So we have much more clear visibility at the open, right? So look how different right now is the book. Delta flow from a bullish became bearish. Okay? Instead of 5,180, now look that we have defense at 5,195. Okay? Because yesterday, why I told 5,185 is because where we start to see negative gamma allocation. Look at how different is the structure right now. Let's check the gamma first. Now we have negative gamma at 5,225. So below 5,225, we have only negative gamma. Okay? But look at the regions that we have now divergence. We have negative gamma, but we have positive delta flow. So looks like that dealers want to defend markets between 5,190 and 5,200. So tends to be buyable that region. That region. So where we have negative gamma starting below 5,225, so we don't have divergence at 5,220, this is negative delta. We don't have divergence 5,215. We also don't have divergence in 5,205. So we start to see divergence between gamma and delta is at 5,200, 5,195. So you guys realize that 5,200 nowadays will be a stronger region. Could you be considered a support? As yesterday they left 5,200 as a plus GX, right? So after the update, we are looking at that's not more a plus GX, right? Now is negative gamma and the minus GX is 5,225, okay? And the divergence between 5,195 and 5,200. Remember that yesterday Powell said that if you start to see a strong job market, they don't have any intention to cut the rates. So today we have jobless claim. If you numbers come stronger, of course that this data is totally fraudulent. We guys know that. But if it comes stronger, maybe market will react it in a negative way. And you could see a dump. A dump up to 5,200, 5,109. If come stronger, if you come stronger, you're supposed to be see a dump. If you come weak, they give you like gas to pump the market. Because that's the propaganda. But I cannot come to you guys and said that today, you'll be red because we don't have divergence. Right? We don't have divergence. We have some orders over here that yesterday suggests a floor at 5,225. Right? Suggests a floor at 5,225. And if you see right now the gamma, since you have positive gamma above 5,225, per gamma, if you guys want to analyze gamma, 5,225 became a support, right? Became a support. It's because you have minus GX. So it's where bulls need to defend. And if you check the volatility skew, and if you want to see your put being paid, your call being paid, 5,225 will be the support. See? So we don't have divergence in the book. We don't have divergence in the book. Could you be a red day? Of course, markets know what they do. I'm just passing by the book, the interpretation of the flow. The flow is not bearish. No, became bearish at the open. As I said, could it be a trap? Could it be a trap? They could be start to sell premium, to dump the market? Yes, it's totally possible. Because that I told you guys, important are the levels. Where the levels is saying that calls start to be paid above 5,225. What is the level that puts start to be paid? 5,220. Per volatility skew. Per deltas, where we supposed to be see a defense? 5,109, 5,200. Okay? Per gamma, where we supposed to be see a rejection? 5,250. That's where we have the plus GX. Right? So those are the levels that we need to monitor to take, the decision. And wait to see if they will really sell at 5,250 and if they really buy at 5,225, and if they really want to buy at 5,190 up to 5,200. Because that's, you know, the levels that we have set up in the book for a sell and for a buy. Okay? Look what's printed in the book in the pre-market. Because the pre-market go up to 9.15, as you guys know, you guys can negotiate options contracts up to 9.15. So after 9.15 up to 9.30, like 15 minutes, you cannot do anything. So the pre-market go up to 9.15, as you guys know. Okay. So in the pre-market, let you know my screen refresh. So we print, you know, higher delta orders with higher implied volatility, right? What's the underlying? 5,225, of course, because market closed at 5,205. So how do we interpret that? They bought or they sold? So far, it looks like they bought. Why? Because the future is 23 points up, 0.44. And because the volatility skew also is telling us that above 5,225 calls will be paid. So, per you know what we learning regarding options, this is supposed to be a buy. Higher delta, higher implied volatility in call contracts. Volatility skew is a bullish smirk above 5,225. Calls will be paid. But Fabio, we have the GX at 5,250. We could see a rejection. Yes, we could see a rejection. So could you be also a sell call to get a premium to see like a delta decay play 0DT? Yeah, also yes. Also yes. Because you know the break even for 5,200 strike, you'll be 5,246.660. This was filled, you know, this is like a robot. This is like a robot that look for the best price because it wasn't filled, you know, in the bid, right? Was filled between the bid and the ask, okay? The bid and the ask. It's like 200 contracts. And also 5,195 as well. Also was filled, you know, was like a robot looking for the best price between the bid and the ask. Okay? So also could you be a sell? Also could you be a sell or an unwind? Like I will do right now with my 513 XSP. I will do after, you know, the morning call video. Also could you be an unwind? You know, that's something that is difficult to make interpretation. And especially, you know, the thinking swing is highlighted as white. So white usually is a block trade between two dealers, you know, is a block trade. Okay. Again, over here above, I have 7:30. 26 minutes after, you know, this one. More higher delta orders. Right? Same strike, 5,200, 5,195. Also was filled between the bid and the ask. Both more 100 contracts each. So could you be an unwind? Yes, could. So if you was unwind, you know, dealers is telling us markets go up to 5,250. That's the GX. Since the future is already, you know, pricing such level, so I'm just start to unwind, put profits in my pockets. It's not also doesn't mean that the market can go higher. Could you go higher? So if they're unwind, you know, just premium being collected. No, not premium, like profits put in their pockets. And look now, you know, at 738 is a -1 delta orders printing to 119 contracts. So Thinkorswim put red because it looks like that somebody sold. Why they put red? Because it was filled at, the ask price. Sorry, the bid price, not in the ask. The ask is 9.10. If, was a sold, as Thinkorswim suggests, the break-even of such order is 5,254. So if the guy, really sold this player is expecting, market is trading above 5,254. So if this is a sold, right, and those, the higher delta was a buy, we supposed we break 5,250. Means that, the job, the jobless claim, the job data, data, the macroeconomic data, supposed to become weak. That you suggest a cut and provide gas histamine to pump the market. That, as I told you guys, volatility skew is bullish, the flow is bullish, right? But at the morning right now, the delta flow starts to become negative, a little bit bearish. 5,225 is the minus GX. Since the flow, the entire flow is bullish and the gamma is positive, what is the pattern of the gamma? Sell rallies, buy weakness, right? Buy weakness. The weakness per gamma is 5,225. So per gamma 5,205 suggests as a support. Okay, gotcha. So those orders that just prints suggest us per current structure that they sold puts and bought calls, right? So suggesting us that we could break 5,250. Okay, that's the interpretation. That's the interpretation. Guys, take care. Have a great day. No, I'm not willing to buy. I'm just willing to do swings accordingly, the structure level. I'm not willing to open any long position. You guys know that I already closed all my long positions that I bought long time ago. I'm full cash. I'm zero interest, to be long. Market is getting in a point that for me is really dangerous. Why? We have been flipping flop structure. Every 2-3 days, you guys notice that you have been flipping flopping structure. You guys also saw, I posted this in one of my market wraps. Let me put smaller. You guys have been noticed, I guess I was like this one. So when look the green volume over here was the biggest green volume over here, right? So those people that bought over here, right, sold something like here. Look the biggest red volume and the small candle. Those that bought like something over here, bigger, green volume, sold something over in the quadrich. Look the biggest red volume. Small candle, right? So you guys have been noticed. Just check the volume profile. The biggest volumes is ours red. Compared with the greens. So this is just certified that what I have been telling you guys, especially because the flip-flopping structure, they have been distributing You know, risky assets have been moving from dealers to retail. Remember, CTAs are also retail. Remember that also keep in mind that dealers don't have sentimental. Dealers only look for premium. Dealers only looking for dollar, money. Dealers don't have greed. Retail has greed. CTAs are retail. CTAs are not dealers. CTAs are retail. Okay? Dealers are the liquidity providers. Usually the treasury department of big banks or shadow banks. Okay? They are the dealers. When you see BlackRock, my fund was negative, my customers lost trillions. They don't fucking care. Why? Because they receive the 5% commission. Is regarding also, it's a good example is the Bitcoin. A lot of people have doubt. It came to me, but BlackRock you losing money because they bought Bitcoin. And I said, who bought Bitcoin? Because the ETF. No, they didn't bought Bitcoin. Who bought Bitcoin was the ETF investor. He just looked for the 5% that they charge. BlackRock, you're not losing money. They build like an ETF. They sell Bitcoin. They don't buy Bitcoin. They sell Bitcoin. They sell the ETF. They look for 5%. They want a 5%. They don't fucking care about you that are buying Bitcoin. If Bitcoin go to zero, they don't fucking care. They receive the 5%. You know what I'm saying? You guys understand? So, consequently, no, I don't have any zero intention to buy now, because I bought here. I already get all this movement. I really don't want to get 1,000 points. Imagine that go to 6,000. But if something happens right now, imagine with 100 points, how much you'll be like. Because let's look those levels that I already book. So 10%. Why are you trade like 10%? If something happens and drawdown and I get like a drawdown at 30-50%, fuck, I don't want to trade that I don't want to really, I really don't want to want like 90% upside. I'm not looking to get more 90%. I don't care. I really don't care. I don't sell tops. I never sell tops. I sell, when I see the risk reward is not paying too much premium to me. And then I realize that, when the risk reward is not paying too much premium to me, I get out. In the life, we have we have only two bullets. So we have 2 shots, right? We don't have 100 shots. We have in market, in financial markets, we have only 2 shots. One of those shots pay a lot of premium, fast and furious, but the risk is really high. The risk is to your account go to zero. And which one is the first shot? Get a crash. But you guys have been realized that the entire market, let me put 12 months. The entire markets look for a crash since 2009. Sorry. Since over here, since 2019, right? They still looking for crash since here. And look what market did. So people that, you guys saw big names trying to short the market. Cowie Khan, Burry again, a bunch of CTAs. It's not me. You guys saw the news. They have been trying to short the market since over here. And look what the market did. Because if they are right, imagine if you short the market over here and bought over here, you make a lot of money, right? 2022. 2022, the majority didn't trade, this pullback, didn't make any money. They lost money, right? Because it's much easier to trade, this type of candles. It's much easier to trade those type of candles. Nobody teach you guys to trade those candles. Nobody teach you guys to trade those candles, right? Because that's the most difficult trade. That's the most difficult investment, to trade negative delta. But you make a lot of money if you trade well, right? Because usually implied volatility skyrockets, so the puts pay a lot of premium. So this is one shot. But this is the most difficult trade. This is the easiest trade. So where is the second shot that the market give to you guys? By bottom. Well, of course that this over here wasn't bottom at all so far. We don't know the size of the drop, when a black swan raise, when the recession starts to be priced. We don't know the size of the drop. I don't know. Myself, I don't know. A lot of people say 80% drop, some say 60% drop, others say 50% drop, others say only 10% drop. What I'm looking for is to have enough cash to use the second bullet, because the second bullet is the easiest one by bottom. I really don't want to buy here. Zero interest. And I zero interest to hold the asset and to build a hedge. I'm not a CTA. I don't need to have hedge. If your asset need a hedge to be profitable, I prefer to have money. I prefer to have money. Make sense to you guys? We need to protect our heritage, because we make money with our work, not with the financial market. The financial market is a tool to protect our heritage. But the majority of the people look for the financial market to be billionaire from one day to another. Okay? Yes, Fabio don't have any interest to open long positions. Zero. I don't care if the market you go up to 6,000. I don't care if I lose 9% again. Because I already make enough money to buy bottom. I'm also not interested to get the crash. Of course that I really want to get the crash. But I will not look for top, to buy puts. No, now the crash should be here. The top is in. The top is in. And you keep crazy like, the Twitter's account that he have been short the market since over here. And, they are very poor. Because, the tethers are already burning all the premium that they had in their puts. I'm not crazy as them, Of course that everybody want to get the crash. Because the crash, that's the first bullet, that's the first fast money. But it's a big risk. Nobody knows where, this market goes. Nobody, guys. Nobody, because that you need to predict, to check, the flow and try to do swings, especially when you see like a parabolic movement. The market is in a parabolic movement since 2008. It's not since to COVID. This is a parabolic movement. This is end of the cycle. I don't know how difficult to understand that. This is the end of the cycle. Market's not doing like a health movement that they usually do. And if you try to analyze since 1980s, 1975 especially, why? Because in 1975, because Japan started to print money back in 80s. Back in 80s. So the issue that we have in the worldwide economy didn't came in lemons in 2008. The issue in the economy started back in 80s. Back in 80s. Basically, when we were kids. Because I have 50 years old. I born in 76. Almost 50. I have 48. Right? So we were kids in that time. So the economy started to fail back in 80s. When I speak with some person that maybe we will not see a recession, guys, person that talk about this, they don't have idea how the economy it is. The economy have been failed since the 80s, and you guys can see this parabolic movement didn't start in 2019. This parabolic movement starts in 80s. Get a lot of fuel, especially after Bank of Japan start to print money to put the rates in negative territory, and after the big recession in 75 in US. So we are in a parabolic movement, folks. Market never have been doing this. Market never have been doing this, guys. How difficult is to look for a graphic like this and try to understand that we are right now in a very dangerous environment. Right? I got, all the money that I was considering like free money, easy money from the market. From now on, I prefer to stay cash. I prefer to stay cash and only open swing trades. I don't hold any assets overnight. I avoid that. Guys, take care.